we're getting larger, and we've kind of we've come up with a name and a philosophy, and we're kind of just trying to figure out what we're going to do. And we're going to focus on, as I said, education and networking, because there aren't a whole lot of groups that are focused on teaching people about passive investing. And to be honest, most people don't know that you can invest in real estate through syndications and everything. Everything they hear from Wall Street is, you got to buy mutual funds, you got to invest in your 401k, and there's all these standard products that are recommended. And that's because Wall Street recommends them, because Wall Street makes money off of them. And one of the things I really don't like is that they call what we do alternative investments, right? But it's the places you live. It's they're not alternative. They're actual real assets. And that's where we got our name Left Field, is because people that are investing in Wall Street and those kind of financial assets look at us like we're way out there in left field. And so we embrace that. We are investing in alternative assets but it's always real assets that produce cash flow.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke, and today we have Jim Pfeiffer. Jimmy is part of the Left Field Investors. It's a group like-minded individuals interested in creating financial freedom through passive investing in real assets that generate cash flow. But I appreciate you coming on. It was good talking to you for a few minutes as we started the show and to learn a little bit more about each other. But I just want to know a little bit more about your background. I know we kind of chatted a little bit, but I would love for you to share with the audience how'd you get started in real estate.
Sure. It's I call it I was an accidental landlord. So I worked in business for a while, and then I was a financial education teacher and a financial advisor. And in 2008, we built a house because we had our son and our family grew, and we needed a little bit more room, so we moved. And we couldn't sell our house. And 2008, the financial collapse, real estate was a problem, so we couldn't sell, and we decided to rent it. And so I really didn't like being a landlord. Christmas Eve, the bathtub flooded or something. I had to go over there and fix stuff, and I just really didn't like it. But we couldn't sell the house, so for 5 years, we rented that house. And then I went to sell it, and my real estate agent said, "Well, why don't you just let me manage the rental?" And I was like, "Oh, okay." And so I let him do it. And then, I realized that house was paid off. And I talked to the real estate agent, and he's like, "Well, why don't you refinance, get some cash and buy a couple more rentals?" And he said he'd buy them and manage or find them and manage them. And so I did that. And that really got me hooked, because then I started, I wasn't dealing with it as far as managing the tenants, but I saw the benefit. I turned one asset that was mildly cash flowing into 3 leveraged assets that were heavily cash flowing. And that just got me thinking, wow, this is great. So of course, as most people progress from single family homes, I thought, hey, maybe I'll buy a duplex or a fourplex. So I found a property manager who's going to help me with that. And one way or another, I ended up buying a 22 unit. Nice. Just because I'm like, well, if 4 is good, 22 must be way better. And then I bought an 8 and a 4. And so then I had, and I bought some more single family homes, and I was really acquiring a lot of real estate. And I didn't do very well at the multifamily, to be honest. The manager I had wasn't doing a very good job. I was just pressuring him all the time not to evict anybody, because I wanted to make sure I didn't lose any cash flow. But what we needed to do was evict everybody and just do a full rehab on the place as a Class C property. So it just wasn't managed very well, and I didn't do a very good job at it. But, in those days, I bought it in 2014. You couldn't lose money buying multifamily real estate. So I ended up selling all of my multifamily in 2018 and 19, and appreciation saved me, right? So I had a ton of capital gain, and around the same time, I had a 401k that was rolled over into an IRA, and I did a self-directed IRA after I went to a real estate guy's seminar. And there I had this chunk of money, And I thought I wanted to be a syndicator. And what I learned was I wanted to invest in syndication. So I met some people at the Real Estate Guys seminar, and I just started, like, it was my retirement money. So I'm like, this is good money to experiment with because, I don't have to use it for a while. And so I just started kind of buying into syndications. And most of those I wouldn't do today with what I know now. But at the time, I had to get started. I had to just take some action. And so then I started doing some research and really learning about passive investing in syndications. And that's when I started investing with my non-qualified money, with the money that I had, the capital gains from selling all the multifamily. So what that enabled me to do was I did what my accountant calls a lazy 1031 exchange. So I had these capital gains, and most people want to do a 1031, which means you have to buy a bigger unit or a bigger apartment complex or whatever with a bigger loan. And I didn't want to do that. So what I did was I started investing in syndications that gave me cost segregation. So I had large cost segregations, which ended up taking away most of that tax burden. And that really got me into passive investing. And so since then, and that's what I do full time now. And so that's kind of the long story of how I got into real estate. Also, on a side, I was a financial advisor when I first got into real estate. And the more I was getting into real estate, the more I was realizing I was telling my clients, hey, invest in these Wall Street products, while I was putting all my money into real estate. And that wasn't very authentic. And so I started recommending real estate to them. But as a financial advisor, the reason none of your financial advisors are recommending real estate is because they don't make any money off of it.
Mm-hmm.
And they're not licensed for it. So that kind of changed me. And I got out of Wall Street and paper assets. And now I exclusively invest in real assets that produce real cash flow. And that's my focus.
Yeah, I like that story a lot, especially when you was telling me regarding your community that you are, that you form with other investors and really focus on like education and passive investing, and you having a lot of experience and done a lot of different things and experimented with your retirement funds. You have a lot of insight that you can offer the group. But can you talk to us about kind of the mission of your group and what you guys are trying to achieve?
Yeah, so we it's called Left Field Investors. And we're just starting out. I started it in March, and I had 12 people. I could only have 12 because we were going to meet at a restaurant and have dinner. And that was the largest free room I could find was for 12 people. So our first meeting was March 18th. And if you remember, in Ohio, at least, the state shut down on March 15th. So that meeting was canceled. And that was actually one of the good things that came out of this COVID pandemic, if anything could be called good, was that all of our meetings went to Zoom. So instead of sitting at dinner and chatting and not really having a focus, we had to have a topic for each meeting. Mm-hmm. So then we started meeting every couple of weeks because no one was going anywhere. There wasn't anything else to do. And so I slowly grew the group and added some people from out of state and added some other people. And so now we're getting larger, and we've kind of we've come up with a name and a philosophy, and we're kind of just trying to figure out what we're going to do. And we're going to focus on, as I said, education and networking, because there aren't a whole lot of groups that are focused on teaching people about passive investing. And to be honest, most people don't know that you can invest in real estate through syndications and everything. Everything they hear from Wall Street is, you got to buy mutual funds, you got to invest in your 401k. And there's all these standard products that are recommended. And that's because Wall Street recommends them because Wall Street makes money off of them. And one of the things I really don't like is that they call what we do alternative investments, right? But it's the places you live. They're not alternative. They're actual real assets. And that's where we got our name Left Field, is because people that are investing in Wall Street and those kind of financial assets look at us like we're way out there in left field. And so we embrace that. We are investing in alternative assets but it's always real assets that produce cash flow. And what our group does is we have monthly meetings, and we get syndicators, sponsors, other passive investors to come and talk and share their knowledge. We have a website that's just up. I actually went live today. It's very, it's a work in progress, as with everything in our group. But, on there, there's blog postings that educate people, and we have some financial models or like deal analyzers that help us analyze deals and help us analyze sponsors. And so those are some of the tools that we're going to be sharing with the members of our Left Field Investor Group.
Yeah, I like that a lot. Yeah, definitely is really key of education. I mentioned that it's just not really mainstream. They call it alternative investments, and definitely they got to have their narrative because it's something that they don't make money from. So it's definitely key that you're putting it out there, and especially now where the Jobs Act of 2012 passed, that these investments are starting to become more accessible to kind of like regular accredited investors that are seeking to alternative stuff to grow and protect their money. As far as kind of some of the topics that you guys discuss, I know like going through the pandemic, heading in towards 2021, and then what are you guys thinking about as far as kind of asset classes that you guys are like more bullish on, and stuff that you can probably share with the group that say we kind of like this and these are the reasons why.
Yeah, that's a good question. So I'm bullish on anytime you invest in an asset that produces cash flow. That's what I keep saying. But part of it is, if the value of the asset goes down, but you're still getting the same cash flow, it doesn't really matter that the value went down. And I don't think the value is going to go down. But if it did, I'd be okay because I'm getting the same or similar cash flow. Your cash flow won't be smaller, but it's not like if you're investing in the stock market and the value goes down, then your investment's gone, right? Or it's cut in half, but you don't have any income from it. So as long as you have income coming from it, I think we're in a good spot. But what we're investing in, multifamily is pretty popular, obviously. We do self-storage and mobile homes interested in. There's one sponsor that does industrial triple net leasebacks, which I really like. They find companies that own their own buildings or industrial areas, and these companies need cash, so they sell their property to this sponsor who then leases it back for them. So the sponsor, it's triple net, so the sponsor doesn't have to do anything. All the insurance, repairs, everything's paid by the company, and so it's just basically manufacturing cash flow. So we really like that. For some tax stuff, the ATM machines are getting pretty popular, so some of us do that. There's a lot of other niche investments that we're looking into, but those are the main ones.
And as far as kind of, I know that you guys also invite sponsors, and they kind of talk about the kind of the investments they're involved with. For the folks that are looking at coming on the passive side, I know we both have listeners on active and passive side. As far as kind of like some tips that you can give some people in regards to, looking at a sponsor to see if they're a good fit for you, and is kind of checking out their background or their track record, and just kind of checking all the boxes to see if that's a good good and right fit.
Yeah, we have a tool that we use. It's basically just a list of questions to ask, and the answers are important. But what's more important is the connection, right? You have to talk to these sponsors before you invest with them. They won't let you invest without a conversation. But you got to make the most out of that conversation and really figure out, is this somebody? Everybody in this industry uses the term know, like, and trust, but that's absolutely true. You have to meet them, whether it's virtually or in person. And you have to figure out, is this someone I want to do business with, and can I trust them? And so it's hard to figure that out. And so part of what our network does is, when I started the group, I'd invested in a bunch of syndications, but most of the people in my group hadn't invested in any. I think one guy had invested in a couple. And so I thought I was going to give all this knowledge. And what I found out is I was getting knowledge, right? So the one guy that had invested, he'd invested in a couple of the same sponsors as I did. And so that just gave me confidence, right? Because now I know somebody else has some experience with them. So what we do in our group is we talk about what sponsors we like, why, and you kind of get an idea of who the good sponsors are and who are the ones that are maybe not as good. And it's really hard, but what you got to do is you just have to do your research. I don't really do background checks or things like that, but I do have some people that have invested with them. And when you know somebody that's been full cycle with somebody, it gives you a little bit more confidence. And so we're just, sharing information and interviewing the sponsors is super important. And if I get a feeling like, oh, I don't know if I like that guy, that tells me something. Or, communication is a big deal. Once you get the deal, if I send you an email, I'd like a response within 24 hours, right? Or some kind of response. So you can test that out before you invest. Just send them emails, ask them questions, and see if they get back to you. And that's a huge thing. It just shows that they care and they're invested and they're full time in this. Mm-hmm. And so, our sponsor questionnaire is important. I think the most important thing is the sponsor, and it's hard because these are the most illiquid investments I think you could have. If you own your own real estate, you can sell it, right? So, but if you in a syndication, you're locked in. So you got to know that these people are going to have, be thinking of you and the investors. And a lot of these guys, as you said, you mentioned the Jobs Act of 2012. So that's really when the syndication started. So a lot of guys don't have full cycle deals, right? They haven't bought and sold something. Mm-hmm. So how do you tell if the deal, once you've invested, if it's any good? Well, the only way to tell is if they're doing what they said they were going to do. Is it going to pro forma? Are they sending reports when they said they're sending reports? And since 2012, anybody could make money on multifamily real estate or most of these real estate assets. I mean, I did a horrible job managing my one property and I still made money. Mm. So as we're going into 2021 and there's a pandemic and there's all these questions, it's not going to be as easy to make money as it was before. So, I look for sponsors that have a long track record or come highly recommended, or I have a real good feeling about, or I've met in person and have gotten to know.
Yeah, I like that. Very good points. I really like that a lot. And I also like the fact that you guys have these groups where you mentioned that you invested and another person invested with the same sponsor. So then now you have more people that can give testimony and kind of back up the claims and back up they do send the reports. They do email me back. I've talked to them. I got a good feeling about them. So it's, once you kind of continuously build up that community, you get more people that are involved. So it's more kind of like a group effort. And then you can kind of educate people and people can feel more comfortable, because for some people it's a new thing where they're just used to stocks and bonds and single family investments and jumping into syndications, especially where some of them are asking $50,000, $100,000 to invest is a big commitment. So you want to make sure, and you had mentioned it was illiquid. So it's not like you can just say, I need my money back. It's like you're going to be committed. So you want to make sure all of the steps are in place, and then you have a really good feeling moving forward. So you definitely made some good points there. I really appreciate that.
Yeah. I mean, the fact that you can't get in most of these deals unless you're 25, 50 or 100 grand makes a huge difference, right? Because that's a big commitment. When I wrote that first check for 25 or 50 grand, it was hard to do, so another thing that we do in our group is we invest together through there's this platform called TribeVest, and it just makes it easy for people to get into a group and invest together. So I have several different groups. One, we throw in $100 a month, right? And this year we invested in our first deal. We threw in $100 a month, and then everybody threw in $1,000 to get us over the top to get to $25,000. These are all non-accredited investors, so we had to find a sponsor who would accept non-accredited. And it's just, these are people that would not have been able to invest in this otherwise, because the $25,000 is just too much. And I also have other groups where, we put in $5,000 each into a deal. So instead of getting in, and we maybe do 5 deals in a year. So instead of getting in one deal for $25,000, doing this group investing, we can get into 5 deals for the same $25,000. And now we have diversification of asset, diversification of sponsor, diversification of geography. And it really, really allows people to get in for lesser amounts. I think that's important. That's the hard thing about these is that the minimums are so high.
Yeah, and especially for people that are either they can do it and just not comfortable, they want to kind of get their feet wet, or, definitely just give people the opportunity to kind of just get the ball started. They know the benefits of passive investing. They want to do it, and they just not right there at that point. That kind of allows them to kind of step forward. For people who are not familiar with that platform, can you kind of explain? You said Tribal? What was it again called?
It's TribeVest.
TribeVest. Okay.
Yeah, and it's a platform. The nice thing. So when I first started investing in a group, it was with a couple of neighbors, and so we were going to invest in our first deal, and so we had to get money together to put it into our LLC. And so my neighbor's son came to our house with a check for $12,000 made out to me, and I wasn't home, and he gave it to my wife, and my wife's like, "What are you doing? Why are you taking 12 grand from the neighbors?" And so what TribeVest does is they allow the bank account to send the money into the LLC, and they help you with the wording for the LLC, and they help you so it's easier to put it together. If you already know how to put together an LLC and connect a bank account, you could do it without TribeVest. With TribeVest, one of my tribes is 11 members, so I have to go emailing and knocking on doors saying, "Hey, where's your $100 this month? Where's your $100?" TribeVest just to connect the bank and everything. It just makes everything easy. It's just a platform made easy.
I like that a lot. Can you kind of give some tips? I know that your group is continuously growing, doing podcast appearances and kind of just, reaching out via the web. Is there any other tip that you use to be able to grow your network and just kind of just, reach more people and educate more people?
Yeah, we're really growing slowly because at first we didn't want to grow. We wanted to have a small enough group that we could have dialogue about a deal and we knew everybody and so we didn't want to grow. And then we thought, you know what, we're producing some pretty good content. And we really want to help people. So we're kind of going to have two groups. One is going to be the larger group that can read the blogs, can come to our meetings, can interact with people. And then we're going to have what we're calling the infielder group, which is a smaller group of people who are really into this and want to talk about deals and want to see our tools and really get into it. So we're still kind of figuring out how do we grow. And one is, being on podcasts. Another is just, when I listen to other people's podcasts and I hear someone who's into passive investing, I always call them up and say, hey, you'd be a great contributor to our group. Do you want to join? So we're not really looking to grow big fast. We're just kind of, all of our group members, I say, hey, if you know someone who's interested, let's have, let them know about us and see if they're interested in joining. So, I use the analogy, I forget where I stole it from somebody, but, we're kind of building the plane as we're flying it, and we're going to figure out how to land at some point, but we're just kind of going and we're not sure where we're going to end up. I'm not a professional meeting planner or group organizer or anything like that. I'm just a passive investor who has a passion for it, and I want to help other people and learn from them and teach them. And so however we can grow it is how we're going to grow it, and we're just going to see where it goes. So we don't have it all planned out. We don't have it all figured out, but we know that we have information to share, and the more people that are interested in what we're talking about, the more we ourselves will learn and improve.
Yeah, I like that a lot because you mentioned just a community of like-minded investors, passionate, and everyone's kind of learning more. And of course, there's always so many nuances to the syndication business and sponsors and asset classes and this and that, and just best to everyone's kind of grow together, but at least everyone has kind of that common goal of, the benefits of passive investing and all of the building wealth and capital preservation and all that stuff is kind of everyone kind of gets that concept, and people that like that and want to join it, that's kind of like a good basis, even though all of the parts is not, totally, figured out yet.
Right. Absolutely.
Just kind of learn a little bit more about you. I know that you had a really good backstory, and then we kind of chatted before. I had a couple laughs, but we'd love to kind of learn what's like a typical work day for you. And do you have any special morning routines?
Yeah, every day, I get up about 6 o'clock and I exercise. I go for a long walk. And then one of the things, I work at home, which is new. It's been about a year. Well, I guess everybody does in the pandemic, but before that I started working from home. And one of the things I do is I get dressed like I'm going to work. Even though I'm just going into my home office and I could just wear my PJs and a t-shirt, I feel like getting dressed kind of sets everything up for me, and dressing like I would if I was going to a job helps me get in the mode to do some work and get focused. And the other thing I do, or I try to do, which I don't do a very good job of, but I'm kind of saying it here because I want it to be one of the things I improve on, is just 2 minutes every morning journaling, just kind of a couple of things I'm grateful for and a couple of things I want to do. I think it really changes your mindset. I don't do it consistently, but it is, I'm announcing it out here because I want people to listen to this and hold me accountable and say, hey, did you do that today? So that's something that is on my list. So I don't do it very well, but it's something I'm hoping for.
I like that a lot. Yeah, I do some journaling as well. And like I said, it just like, reflecting and talk about your day really definitely helps a lot. And at first, like on face value, just seeing like, what is this thing going to do? But then once you start getting into it, definitely makes a huge difference. And a lot of the other investors and all the people that have on the show say they do the exact same thing. So it's like, people that want true success and kind of reach their goals, it's like, just kind of follow where the chips are, where everybody else doing it. And, you notice things that is going to occur. So yeah, I appreciate you sharing that. And so do you use any other additional tools or resources to help manage your day or make it more productive? The tools, it's hard to say. I do a lot of Zoom meetings. A lot of it's through email also. And then I just actually got into Calendly
the schedule
Great
thing.
tool. Yeah.
Yeah, I did that for the first time, and of course I messed it up and had someone scheduled during another meeting that I already had. So I messed it up the first time, but I really like that. And then building this website, I've learned how to use Elementor a little bit, which is how you set up websites. I'm not very good at that, but I'm, like I said, learning all this stuff. So that's another tool that I use.
Awesome. And it's I know we'll make sure to have the link of your website on there, but can you share with us how we get in contact with you? And for people that's interested in joining a group, how do we get in contact?
Yeah, you go to the website. It's www.leftfieldinvestors.com. There's some links there where you can get into Calendly, and there will be eventually a contact form. That doesn't work yet because I'm still working on it. As I said, it just went live today. But the best way to contact me is my email, which is jim@leftfieldinvestors.com.
Awesome. Yeah, and by the time we probably have this this episode air, is probably going to be up and running with your stuff. But we'll make sure to have your email address so they can get in contact with you and get more information and just start the discussion. Like I said, it's all about education. Jim, It was a pleasure to speak with you. I really learned a lot from this, and like I said, it's definitely as a passive investor myself, know all the benefits, and I can see why you're so passionate about it. So I appreciate you sharing it for our audience, and I look forward to connecting with you again soon.
Thank you very much. It's been a pleasure.
All right. Take care, my friend.
All right. You too.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.